Well, hello, folks. I'm L.A. Little, and this is your daily Neo-TA wrap, where we take a look at these markets and we do it from a neoclassical perspective. Each time we ask ourselves one question: what happened today? What does it tell us about the coming ones? I do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. If you want to subscribe anytime I push content, you get notified. Nice and easy. Good way to stay up to date with what's going on. And each and every call I make on these markets, as far as what happened today, it was a mixed day. You go up, you make failures all across the board, right across the board, each and every market. Let's look at the ending numbers. And for some reason, these quotes that I get, from ProfitNet, they're usually pretty good, but for some reason they have trouble here with the Russell. Russell was actually down today. Matter of fact, the Russell was leading to the downside all day long. So we had negative numbers. They go up, they give it up, they go into various tests on each of these indexes and the sectors. I'll show you those. They fell, they're coming back down. That's the way it looks here to me. Gold also gets hit. You actually got silver hit. You had big move down on the oil market, 3.3%. That big short covering spike, it's over. It's coming back down. Dollar flat, not much happening on that count. As far as the rest of the markets, let's take a look at the indexes and see how they stack up here tonight. We'll start with the S&P 500. So the test that we're talking about, that's evident here on the S&P 500, as well as many of these indexes and sectors. Really has to do with this breakdown, right? If you go back and you look at this breakdown area, right, when you come straight off the top and you move down without any kind of push back to the upside, it's an extended move in terms of price, in terms of duration, and that move, when it happens, it sets up the counter trend bounce. In other words, you get the bounce back up, and when you do that, right, usually what happens is that big wide price spread bar where you get the blow off bottom on top on high volume, right? That area, that little congestion area, that becomes kind of a magnet for price for some period of time to come. And as you can see today, that's in fact what happened. It goes up, it tries to get into swing point high, it gets into these big bars, doesn't have the volume, right? Gives it all up in terms of price and volume on that test. And once that takes place, what does it do? Flips around, comes right back into the range, sucked back in. The vortex has hold of it. It's going to keep it here for a while, and that's kind of what you should expect, and that's in fact what exactly happened here and elsewhere. Let's look at the other indexes. Starting with the NASDAQ and the NDX, where you had the highest probability for this break to occur to the upside. Now these were the stronger two, right? You had this area up here, which was the breakdown, right? This is where you started the breakdown. That's where you had the push down, right? 2 bars in this case, to the blow off type low. And so what happens is that becomes a tough range to get over, right? That area there. As it comes back into it, you got a swing point high now. Now you've got that big volume in this area here. You come back into it, you don't have the volume, you go up there, you get over the swing point high. You test over it, you fall back under it. That's a failure as well. This thing's going to try to come back down at least into this area, potentially all the way back down to here. NDX, if we look at the NDX, now the NDX is the only one that's a little bit different in terms of the actual failure, because here you actually got into that swing point low. Now, if you've been following me for a while, you know that that is a bearish retest regenerate. So what we're saying is that when we break this swing point low, we get underneath it. If we stay under it for more than 6 bars, which we've clearly done in this particular case, any kind of push back into that area to test it has a very high probability of failing. That's what happens. It gets into it, it does get rejected, fails, comes back down. Again, volume into this area, not as much. And so you get a failure here just like you got it elsewhere. NDX coming back the other way. Finally, the coal mine canary. That's the Russell 2000. The Russell 2000 now, again, here is those 2 bars, the blow off bottom, right? As you come back into this area, you test into it, you get into it Friday, you had a holiday, excuse me, that was actually not Friday. Friday was back here. I took a couple days off. Thanks. Sorry to not be around, but a well-deserved small break for myself. As we come back into it on Tuesday, actually, we just get over that area, and then today we get over, back under. But really what you're testing into is you're testing into these bars. And those bars have a lot more volume than you do here. That's a failure. Flips back around. Russell is going to try to come back down into this price point. That's where the support zone lies. That's where it's probably going to try to come back to. So if you're following that summary, what are you saying? Well, you're saying you tried to get over key areas, right? Areas where buyers should stop buying, sellers should start selling. And you ask yourself on that test, right? When you get to that key area, what happens? It's exactly what happens, right? And when you see that, it's a confirmation of what you thought. And because you're always setting up little theses all along the way, and you're saying, okay, here's what should happen. What happens when we get there? Does it do what I think? If it does, then it's playing out according to script. And that script you can take to the bank, so to speak, and you can bet on it. If it doesn't, then it's telling you something different. You got to interpret what that is. And in this case, it's telling us the same thing that we thought should happen, does happen. That says we're coming back down. Now, if we move over to any of the sectors, we're going to see almost every one of these do the exact same sort of thing. And that is they're going to test back into the 2 bars to the downside, right? They're going to test back into those highs, wherever they may be, and they're going to fail on every one of them. This is the IBB failing, and I could just go right across the board. Matter of fact, if we go to real estate, which we've talking about is a take on the worries about the Fed. Real estate's down here trying to break out the bottom. Interest rate sensitive type stocks having a hard time. Utilities, another example of that same idea. But no matter what you're looking at, whether it's the stronger, the weaker, or the in between, all of them have some sort of a failure taking place. Here's the transports. Transports coming in to do a bearish retest, regenerate, does a full test, comes all the way to the top, and on that test, it fails, right? So you come into this bar. This is the swing point low that was broken. This is the breakdown bar, right? And here's the full test as you come back into it. Of course, what I mean by full test is you come all the way back to the highs of the lows that were broken. You test into it. You don't have the ability to get over it, and as a result of that, you're going to try to regenerate into the downside. And notice here, volume on this 382,000, the bar that was broken 245. So you might say to yourself, hey, well, it's got more volume, it's testing in there. Well, it's true, but you've also got to look at the breakdown bar, 864,000. So you're coming back into an area where there's a lot more sellers than there are buyers. They do start selling again, and that is going to try to regenerate to the downside. Now, we could look at others and see the same thing. It's happened pretty much across the board tonight. But rather than do that, let's take a look at the overseas markets, which has a huge influence on what's taking place right now. Also take a viewer question and then try to wrap it all up.
Learn how to trade with the Trade with LA service provided to you by TA Today. This service includes daily portfolio and comments that are emailed to you before the market opens each morning. We provide a daily view of the markets and a model portfolio you can follow even if you work another job. Every weekend, LA records his weekend broadcasts that gives you a synopsis of the week and a prognosis of coming weeks. You will also have access to our Teach and Trade room, where LA provides day trades and teaches neoclassical concepts throughout the trading day. To get started, go to our homepage and click Trade with LA.
Moving to the overseas markets, if we come into the German DAX, take a look at that one. What is this one doing? Well, this one also is coming back up, testing that same area. Here's the 2 bars on the downside. There's the top of those bars. What does it do? Gets into it. Again, the volume's not there comparatively. As you do that test, whether you're using this bar or you're using the bar before it, both of them are failures, in terms of price. That's going to lead to a retrace back into lower numbers, and those lower numbers initially are back into this area. Support zone right above it. If you look at the CACs, same sort of scenario there. This one actually was doing a bearish retest regen because it's set up a little bit stronger. That bearish retest regen is here. Again, you get over it, back underneath it, fell in terms of these two bars. That one's coming back as well. Elsewhere in Asia proper, you've got Hang Seng, nice big bounce, some decent volume. This one's going to probably get up a little bit higher, or at least it has the potential to get up a little bit higher. But again, I don't see these going very far. You get a big swing point high up here, it's got more volume on it. And that probably isn't even going to get back to this retest zone. Look at this compared to where the rest of the world is. These markets are just trying to get back to the retest regenerate zone, just like the US markets. It's taken a while. It's going to take a while longer before those tests take place. It's so certainly looks that way to me. Flipping to a viewer question here, has to do with the oil market. The question is this going to be a buy? Let me read the exact text here and see if I get it right. Can you give your opinion on oil? No current positions. Looking to go long. I was waiting for a pullback after the recent spike, and I think now would be a good time to start dollar cost averaging my way in. What are my thoughts? Well, I think it may be a little premature to do that. Now, I'm going to use the USO. We could use West Texas Intermediate Crude Futures, whatever. It's easier to look here. Most people can trade this, so it's easier for them to look at this chart as well, so I'll use it. Now, if we look at that USO, right, you did have a huge spike up here, right? Big spike up, big volume on that spike. Now, I've done a couple videos already where I was looking at the USO. They're here on the front page. If we pull back, here was one. There was another one prior to it. You might go back and review these. I'm not sure where the other one was. It was like a week or so before that. But there's another one in here that you could also review. But going back to the chart here and asking ourselves, okay, what's happening? Is it really worth dollar cost averaging in at this price point? I think it might be a little premature to do that. I don't think I would be thinking of a dollar cost averaging scenario off this spike. This spike was a result of short covering. You got a long, steady decline. You get a big counter trend move against it. Now you're getting the fade back down. That's probably going to fade a lot deeper and longer than you expect, and it's going to take a lot longer probably for this thing to really turn, if in fact it is going to turn. And if I pull over the weekly chart, you can see what I'm talking about. And we've been talking about retest regens, right? And here's one here, and it is within 6 bars, and it does have more volume. But if you line up the other bars right behind it, right, you've got this overlap area, and what you can see is it comes into this overlap, even with the big spike, it comes into that overlap, and now it's fading back down. In other words, it's trying to regenerate lower. You got volume at the bottom and here at the top now on this trade. So what that says to me is that this range is probably going to be the range it tries to trade in for some period of time. So if I think about a trade with respect to this, I want to buy it somewhere near the bottom, not somewhere up in this area, right? My reward risk is probably just not that good yet. I want to see it trade back lower, so moving back now to the daily chart, that would tell me that somewhere down in this lower area is where I want to be trying to pick it up here into this zone at best, maybe all the way down into this price zone might be where I'm trying to pick it up, where the volumes really start to pick up. I'll be quite honest with you, I expect it will come back down and test the swing point low before it's over with, so just be patient if you want to trade this to the long side. Watch for that divergence to set up between the XLE and the USO to tell you that more than likely oil is going to spike again. And finally, to wrap up the show, coming back to the S&P 500. You know, when you have a range trade, just like we had a range trade up here for some period of time, about 6-7 months, now you've got lower ranges that have set up underneath it, equidistant lower ranges that have set up underneath it. Those lower ranges now are going to trade themselves. And what are they doing? They're fighting this one area where all the trades are in this general area, and they keep fighting back and forth in that area, neither side being able to pull it off. At some point, one side or the other will pull it off, and we'll get the breakout back to the top side or back to the bottom side. On this time frame, you've got a downtrend now. You've got it on the intermediate term time frame. You still got bullish on the long-term time frame, but the question is that the time frame to believe? when the MTTFs are as extended as they are, or should you be thinking something else at this point? It isn't clear that we're going to break yet. That October low with high volume still hanging out there, market struggling. Look for more consolidation at these lower ranges and eventually, potentially, a test of those October lows on the long-term time frame. That's it for tonight. I'll see you tomorrow. Have a great one. Thanks for joining me. Take care. Good night.